And we're live. Good evening, Crazy.
How are you?
Good, yourself, and hope everybody's watching is good as well.
Not doing too bad. It's been a crazy week. Lots to talk about.
Yeah, we're a little bit late from our normal 7 o'clock plans. So if anyone's upset about that, they can be mad at Crazy for being a good dad.
Teacher interviews.
That shouldn't happen very often.
No.
So, what's new and exciting in the market this week?
Okay, well, we'll jump right into the market watch. I'm actually going to go over, first of all, I'm going to do some of the DeFi projects. Let me bring this up for everyone to see. All right, we'll go to good old CoinMarketCap. Okay, see the screen okay?
Yep.
All right,
it's looking good.
Good.
We can switch that to picture-in-picture and hopefully show it better.
Okay, so I guess we'll start off. I wanted to start off on CoinMarketCap because we wanted to go over the entire market cap. Let's give this a refresh. There was a lot of money that flowed into the market, the crypto space this week. Currently, we have, let's see, 1.8 million plus cryptos. Holy crap, that's a lot. Market cap is up over 1.26 trillion overall. BTC dominance is at 53% and Ethereum dominance at 17.2. As you can see down here, the fear and greed index is quite high. Last week it was at 44, and right now it's at 72. So greed has kind of set in, but I mean that's natural with the price action that Bitcoin.
A lot of excitement this week.
Lots of excitement. With a bunch of different announcements. We'll go over that in the show. So we'll just go down the list here and start off with the Bitcoin, 34,261 currently. It did get back over that 34,000, dip below a little bit earlier today. Ethereum 1,810, holding pretty strong. BNB 223.87. XRP, one of our favorites, at 55 cents right now. It's up 8.21% on the week. I guess everything is up on the 15-day. Look at Bitcoin, 19.5% for the week. That's crazy. I haven't seen that kind of.
It's exciting to see.
Yeah, it's been a long time to see that volatility. Continuing on, we have Solana. Oh, my bad. Double clicked. One of my favorites is Solana. I always refer to it as my redheaded stepchild, and it is sitting at $33.17. It has had quite a pump the whole last 7 days, 33%, 33.5%.
And then on the year, I believe Solana's up over 200%, doubling what Bitcoin's up.
I should actually look at that.
Which is exciting for Solana.
A little bit later, but yeah, and anyone who really didn't believe that Solana was going to be a solid project and the issues with it, there's nothing wrong with it. It's going to be just fine. Dogecoin 7 cents. We have ADA Cardano at 28 cents. Scrolling down, Matic currently at 63 cents. It's up almost 23% on the week as well. It's done really well, as have many others. Let's go Shiba, one of your favorites. What is that? 6079. Yeah, and it's up even almost 60% on the day. Avalanche, another one, $11.10. It's up pretty good for the week as well. So a lot of green on the board, a little bit of red in the last 24 hours, but basically everything is up on the 7 day.
Yeah, it looks like alts are following Bitcoin pretty quickly, which is nice to see.
Yeah, and
as soon as Bitcoin cooled down, right away the alts started picking up, which was nice.
Mm-hmm. And I feel also that if Bitcoin kind of stagnates for a bit and kind of stays basically where it is now, that could give the alts a chance to really run up, some of them anyway. Okay, so I also want to go over, as I usually do, some of the DeFi project coins in the market. We have Shame on You Furio. Thing is still alive, so I will still keep mentioning it. It's down almost 2% on the 24-hour. It's at 2.2 cents. Elephant Money, which seems to be a pretty strong project right now. It's been going for a little bit, and their token is holding strong, 6042, and it is up 1.5% on the 24-hour. Tectonic governance token. It's 6014. It's down on the day, but it did really well a couple days ago. I think it was up about 10% for we'll say 2 days ago. Drip token, they're still trying to revitalize that project. They're coming out with all kinds of different faucets, and other projects are getting involved trying to help the project out, but I don't really see it going anywhere. But currently it's at 1.7 cents. And then Momentum has taken a bit of a hit. I guess some of the money is flowing out of these DeFi projects and going into the blue chip cryptos, which I don't blame them. That's where the money seems to be right now. But Momentum is sitting at 78 cents pretty much, and it's down 11% on the day.
I'm real excited for things to pick up and get another run and some more projects, and not only just the DeFi space, but the NFT space as well. It's a lot of fun playing with them.
Mm-hmm. Yeah,
but we gotta wait for the tokens to do their thing, I think.
Yeah, no, I agree 100%. I just reading one of the comments here by Black Cat Syndicate. Drip, drip, drip. What a joke. Yeah, I hear you there, Black Cat. But I mean, from what you can see, there's a few DeFi projects coming out right now, and they're trying to utilize the drip token and the drip ecosystem, maybe trying to help some of those people that are stuck with their bags and trying to help them ROI. But we'll see what comes of it. At least people are trying, and there's a little bit of effort out there. They're not just giving up. So we'll give them a little bit of credit for that.
Yeah, it takes time to get everything, like all the bugs out of the space in general, and we will see some solid growth, I think, in the near future.
Oh, absolutely. As the space gets older, innovations come out and people start coming out with bigger and better ideas.
Oh, waterboarding. Drip, drip, drip.
Yeah, for anybody who's wondering what that was, Black Cat again, up to his crazy old self. Thanks for joining us, Black Cat, by the way. I really appreciate the support you've given the channel, even back when we were on the Twitter doing the spaces. We just found that this is a much better platform, and we're going to reach a much broader audience, and it's a better platform, I believe.
Yeah, it's nice seeing the familiar names coming over.
Absolutely. Okay, what do we have next on our agenda, Mr. Ball?
What we have next would be the headlines. So you got some news for us?
Yeah, I got a little bit of news, but I think most of what we have to talk about there, we'll talk about after in our roundtable discussion, but I'll go over the other news right now from the week. Other than the obvious, I mean, obviously the crypto market has exploded, but we're going to touch on that a bit later. But I will mention that there was in 3 days, there was $380 billion that was flooded into the market into Bitcoin and a lot of the major alts and a few of the meme coins as well. They took off, but that's the largest amount that's come into the space in a 2 or 3 day period since I believe it was like 18 months ago, last May of 2022. So it's very, very bullish. It's showing people are coming back into the space. And something else we'll touch on later is at the same time, simultaneously, the stock market hasn't been doing well. So we'll come up with some possible theories for that later on.
Yeah.
And also when Bitcoin had that pump, obviously, there's going to be trades that are open, longs and shorts. And in this case, there were $220 million worth of short liquidations in just a few hours on Monday, which is crazy. I feel bad for those people, but there were a lot of bearish sentiment in the market, so there was a lot of shorts.
Oh yeah, Yeah, last week even on here we were talking, and I think with all the guests, we were all split 50-50 on whether we would retest 20 or move on up.
Yeah.
And I got to say, I was saying that it did look like we hit a floor and things would move up. So neener. But who knows? What goes up must come down. And we'll see what happens. People will take profits, and I can foresee a ton of volatility in the markets in the near future.
Mm-hmm. It's funny that you mentioned that back padding moment that you had. You and I have been, I wouldn't say on opposite sides, but ever since this bear market started and the ending of the bull, whenever you and I would compare notes or say, what do you think is going to happen here? A lot of times we were on opposite sides of the fence, which was kind of interesting how you can have two completely different takes looking at the same information. And I know you're more of a traditional stock guy. So a lot of your following is in traditional stocks, but you do have a pretty good finger on the crypto markets as well. And it's interesting to me to see how sometimes we're on opposite sides.
Yeah, well, that's where it comes down to developing your own investment style, because everybody's gonna see something different when it comes to looking at the markets and how they interpret headlines in the news and everything else. So the cool thing that I've learned with us being on two sides of the fence is that regardless of where you stand, you usually end up on a pretty even playing field in the end, because when you're dealing with something like a market where it's up or down, it's a coin flip. So you might not always be right, but you're probably going to be right 50% of the time over the time.
Yeah, I was just going to say that out of all of our predictions to each other back and forth, I'd say we've both been right about 50% of the time, which is kind of funny.
It makes for some good banter too.
Yeah. You know what, though? At the end of the day, one thing we do have in common is we both believe in this space, and we know that eventually it's going to go up. Just a matter of time. And it looks like it has started. So as for the rest of the news, part of the action that happened this week could be due to BlackRock iShares Spot ETF, which was listed on the DTCC, which is the Depository Trust and Clearing Corporation, on Monday, and then taken down the following day. Everyone was wondering what the heck's going on here. And then the website went down for the DTCC. But then the following day, it went back up because the SEC, it turned out, they said to BlackRock, slap on the wrist, you didn't disclose all of your investments. BlackRock said, okay, we'll pay our $2.5 million fine and we get relisted. I mean, what a waste of time. $2.5 million, are you kidding me? Anyway, so that happened, the fine was paid, and then later in the evening it was relisted on the site. And then, of course, right after that, there were rumors that ARK Invest and others will be listed soon as well, which I found was really weird. But that's the games they play. Gary Gensler and his, little merry-go.
Yeah, the ARK Invest really excites me. I like Kathy Wood. I have a similar investment style to what she does, so she kind of speaks to me. And then, I don't know, when it comes to if I was going to invest in one of these ETFs down the road, I would probably lean towards ARK, just because it feels like if I go with BlackRock, I'm kind of investing in evil. I don't know why.
With the enemy.
Yeah, it's just really hard to swallow. But yeah, it's really interesting how aggressive these financial institutions are getting with the push for this against the SEC. Today, one of them, I can't remember who it was off the hop, but it is threatening to sue if it gets their ETF gets rejected. And
really?
They got a precedent now because Grayscale had the SEC in court over wanting to switch their Bitcoin trust into a spot ETF. And the court ruled on Grayscale's side, saying, yeah, you need to have another look at this. So
Okay.
I think that's really pushing the drive. And I think after what I speak about in the spotlight, it'll kind of show why.
Make more sense. Okay.
Yeah.
There's really only one other thing I wanted to mention in the headlines. One thing I've noticed, I don't know if you remember this or if it'll clue in when I mention it, but back in the bull market, as we're coming toward the end, actually we'll go back even further in 2020, as during the run up, one of the first altcoins to start running up was Chainlink. And then the bull market started, everything got going. Chainlink kind of fell behind. It didn't really explode like all the other ones. It kind of fell off. And then when the bull market started, it was one of the first ones to dump. So there were a lot of, jokes and stuff in the space that Chainlink was kind of the leading indicator as to which way the market was going to flow. Well, just before Bitcoin did its run up, guess what happened to Chainlink? It did like a 15% pump in 2 days. And then Bitcoin and the rest of the market followed. So I just kind of thought that was a neat little thing. If anyone wants to have a little bit of a lead indicator on the markets, just follow what Chainlink's doing.
Yeah. I remember last bull run, I think Chainlink was the first altcoin that actually sparked my interest and then gave me a spanking very shortly afterwards.
Yeah. Well, Chainlink's one of those tokens where, how do you put this correctly on a family show? It's one of those altcoins that everyone has their sticky finger in. We'll say a cookie jar. It's one of those altcoins that everyone has a little piece of. They work with so many projects. If you look at a graph where it shows all the different DeFi projects and who they're partnered with, then you see Chainlink. Chainlink, they need their own sheet, like their own full page, because they're involved with almost everybody. And that may be part of the reason why the price action is slightly different than the rest of the market, but it's kind of a neat little
Well, hopefully that means that they're still alive and active. I haven't seen any news on them or anything else.
Who's left to partner with?
BlackRock.
Yeah, exactly. So that's pretty much the headlines for that. I mean, we have other stuff to talk about, obviously, and so I figured I'd wait for that.
There was something else I was thinking about. A senator in the U.S. Put out a proposal to file criminal charges against Binance and Tether.
Yeah, I read that. I didn't put much stock into it because the senator that you're talking about, I'll bring it up and I'll read the headline. But she's what's her name? Let me find her. Anyway, yeah, she's been mentioned in the crypto space before. She's obviously anti-Bitcoin. She always has been. And so when this came out and I read it, I thought, what a joke. Let's see. Okay.
Yeah.
It was from Senator Cynthia Lummis. That's it. Lummis, however you pronounce her name. Yeah, she's filing criminal charges in the Department of Justice against Binance and Tether, claiming that, okay, get this. Let me just read a little bit of it, if you don't mind.
Yeah.
We write to you in light of shocking reports that unregulated centralized crypto asset intermediaries based outside of the U.S. have facilitated significant financial activity over the last 2 years, including providing significant terrorism financing for Hamas's attack on Israel. Are you serious?
Yeah. Very shortly after that came out, they're making claims that it's this big substantial amount. And then the on-chain data showed that there was a news fundraiser for Hamas that they tried using cryptocurrency, and I believe it was completely unsuccessful and only raised like $23,000 or something.
Okay.
Which isn't enough to fund a war.
No, not even close.
So, yeah, all in all, that whole bit of news is just an outright lie.
Just more FUD. That's all it is.
From a government that's sitting there picking sides with two countries that are both funded with U.S. equipment. It's just baffling to me.
Any sense to me? Yeah, like I don't understand.
Yeah,
I don't know. Well, because you can see just based on the political reports that are coming out, the U.S. has clearly sided with Israel on this because not only do they believe that they shouldn't have attacked, but they're also going to be sending them funding. So of course, a U.S. senator is going to come along and say, "Well, Bitcoin is the one that funded the attack on Israel." It's just all more BS.
Yeah, and it's kind of connected with what I'm going to be talking about next.
Well, the floor is yours, my friend.
The floor is mine. Okay, well, I guess I'll get into the spotlight. The one thing this week that really caught my attention, and it got a lot of push. I was seeing this article everywhere. And right off the hop, the first thing I was thinking is, why does this co-founder that I've never heard of, he isn't a popular figure in the space, from an exchange I don't recall ever hearing the name about, feeling the need to spend $7 to $10 grand to put out an article connecting this run this week with fears of military spending and not hype from ETF news, which it obviously was, right? So it was one of those things that just really caught me off guard. So I figured I would go and do a bit of a deep dive, and I got some notes here, so forgive me for looking down and at my screen. This is going to sound like I'm going way, way, way off topic, and then I'm going to swing it around and connect the dots. So, yeah, right now in the U.S., you got the Federal Reserve, pretty much with the stance that rates are probably at their max, but they're going to be remaining high for an extended period of time. And with the little hints of there is a chance if things go sideways that we'll raise more, blah, blah, blah. And then you got the Treasury Department at the exact same time issuing statements that national debt service cost, which is the minimum interest payment on U.S. debt, is expected to be 1% of GDP for the next decade, which is pretty much the opposite side of the spectrum, coming from two branches of the same government. And yeah, granted, the whole point to those positions and jobs is to calm markets both directions, either from getting too hot or too cold, and try and moderate steady growth. So you can look at it all as a lot of Fed speak, but I kind of took a dive into the numbers when it comes to that. So right now, the U.S. debt to GDP ratio is around 120%. And you're looking at similar situations around the world, regardless of the country. And so, yeah, it's up about 20% more than what the U.S. is producing yearly. And the current debt service costs, the minimum interest payment is at around 3.36%. So as of right now, if interest rates were to stay the same, especially if the job market collapses a bit more, it would pretty much lead to a government insolvency and put the U.S. government in a position where they would have to print money to pay debt. And that's the exact point when you hit hyperinflation.
Mm-hmm.
So lower interest rates ultimately make debt manageable. So, but all in all, like, you can't say that this article is incorrect. Like, world temperature right now, like, there's a very good chance that this could escalate and cause more money printing. But just judging on the U.S. financial system and world financial system in general is, there's no choice right now but to start lowering rates and easing up on the pressures. Because the Treasury goal to achieve their 1% GDP rate, the interest rate would have to drop to 0.85%. And so a lot of this news, and then the other news we were talking about, where suddenly you're getting blaming the war, now the military talk, everything else. Like, I think ultimately we're going to see some serious easing on interest rates, which is going to cause assets to start skyrocketing. And if I was to make a prediction, it'll probably mirror the last crypto bull run, where all this starts to take effect right at the beginning. So last bull run, we had the quantitative easing for COVID. And this is looking like we're going to have the same thing, just for straight financial reasons. And they're just looking for playing pin the tail on the donkey. And it's looking like the wars are going to be the donkey.
Yeah.
But so I don't know. It's, as an investor, this is really good news. Like, if you hold crypto assets, if you're holding stocks, if you own property, invested in energy, whatever, it's looking like in the not so distant future, those are going to start skyrocketing. But for the majority of the working class, it's going to be catastrophic, because right now people are struggling already to pay their bills, and that's just, it's the second they start loosening it, it's just going to mean that grocery prices, fuel, you name it, housing, it's all going to start going through the roof again. So we're not going to catch up, and it's going to make a lot of people hurt. And I believe that this new war is going to be the scapegoat for the decision, and not poor financial decisions by the governments around the world.
You mean no future poor financial decisions by governments?
No, because, no, past as well. But what are the chances of cutting government spending? It's not going to happen, regardless of who's in office. It still costs money to run a government. There's no other change that could dramatically help this debt situation. The government's not going to intentionally go into hyperinflation and insolvent and end up paying $1.2 million for a loaf of bread. So, there's going to be easing, and it's going to hurt a lot of people, I believe. And we're going to see a ton of volatility while they iron it all out. But ultimately, I think we're at a bottom, or we've bottomed, and things are looking up in the investment space.
Mm-hmm.
But it will, not only would it coincide with the last bull run, it also coincides with, in general, like, recessionary pressures will immediately hit investment markets. And it's usually 6 to 18 months after you hit peak rates that the general population feels the recessionary pain, and then the financial markets are already recovering or by that point. So yeah, all signs are leading to that. And I think that the reason I went full circle like that was because you hear a lot of preaching about do your own research. And that's exactly what it is. Like, a lot of what you're hearing in news and rumors and on social media isn't for you. There's a reason that they're putting the narrative out there. It's to benefit somebody somewhere, and everybody's chasing the almighty dollar. And for this exact same reason, I think the smart money, like the BlackRocks and everything else, this is why they're pushing so hard and threatening legal action and etc. for these ETFs to get in place before the floodgates open again, because that would mean massive, massive, massive revenue for financial institutions around the world.
Absolutely. Now, one thing that had me kind of stumped, we've watched, well, you're more in tune with the traditional market, as we mentioned. What is your theory behind the fact that the traditional markets have been going down and the crypto market's going up?
Well, right now, crypto markets are getting the buzz about new ETFs and new money coming into the space. There's a lot of FUD in the traditional market with the top tech companies in the S&P, where you're looking at Microsoft, Google, Meta, Tesla, etc. And their company values are actually so high right now that they're taking up 27% of the S&P 500. And yeah, so now there's the big fear, because you look underneath these top companies and it's looked good for the S&P chart-wise, but everybody underneath the big boys is hurting. So now people are panicking and putting in their shorts, because thinking that it's time for the big boys to take their licks as well, especially after Tesla's last earnings meeting, where Elon kind of looked panicked. So yeah, it's just different news going to different sources, and I think ultimately we're in for one massive run and a lot of pain and turmoil in the world leading up to it to justify it.
Now you're talking run up in the crypto space, not traditional markets?
Oh, traditional markets, energy, gold, you name it. If you have an asset, the second they start cutting rates, it's going to start climbing through the roof.
Yeah, that's true.
That's why it's important to own assets and make yourself recession proof and inflation proof
as best you can.
Yeah, well, you're generally always going to end up on the upside. That's it's worded funny, like poorly, but the rich invest in wealth assets, where the poor save dollars. And you just look at the amount of money printing and how much your dollar loses value in a very quick amount of time, and you realize why people are hurting. It's impossible to keep up with it, where if you own an asset, it's going to inflate the more that they print. So the pain isn't hitting the rich, it's hitting the people that need the money in the first place.
Yeah, and as well, we know better than anyone up here in Canada about losing value in your dollar, because the Canadian dollar in comparison to the US dollar we lose it even more. Yeah.
Yeah. But that'll mean bigger highs for us in the crypto market. You're seeing a lot of countries already hitting all-time highs that are so hyperinflated compared to the US dollar that, yeah, it's going to be some crazy times.
I read
How to explain it other than buy your assets.
I read a post somewhere that was saying that the Bitcoin in the US dollar is down 100%. So double it from here and it reaches its all-time high.
Yeah.
But in CAD, in Canadian funds, we're actually down 58%. So it's got a little ways to go to get all-time highs in Canadian dollar as compared to the US, because we've lost so much buying power in our dollar since the all-time high.
Well, I think if you look at the chart, we're higher in price, like a lot higher in price in comparison because of our dollar being so much lower. I don't know if you have ShakePay available there to look at what the Canadian dollar amount is.
Yep, I'll check it. Currently,
ShakePay got a plug.
Not financial advice, of course. Let's see. Right now in Canadian, it's sitting at 47,232.
Yeah. So that shows how much our dollar is down compared to the US dollar.
Yeah. And as I mentioned, the Bitcoin is at 34,154 US currently.
That's it.
But for those keeping track, the Canadian dollar sucks.
Yeah. For those keeping track, the stuff you hear on the news, unfortunately, it's true. We don't agree with it.
Hey.
That ain't made up. Okay, so it's looking like it's going to be just me and you for the roundtable.
Yeah, I think so. A couple of our regulars couldn't make it tonight, so it'll just be you and I. Now, what I wanted to go over quickly, I wanted to actually show my chart, but unfortunately, I don't know, for those that don't know, up here in Canada, there's a lot of regulations on crypto exchanges, and just being able to use them for just charting and stuff like that can be a bit of a pain in the butt, let alone trying to use it for trading, which we cannot. And so every time I log into Bybit on my computer to do charting and whatnot, if I'm away for any time at all and I come back in, it logs me out, and then logging back in is such a pain in the butt. But I do want to set up what I want to start doing weekly, right after Market Watch, or even at the end in the roundtable, is I just want to show my screen and show the Bitcoin chart. I've got a bunch of support and resistance levels that I've been following for months, like pretty much since the bear market started. And then I've got an upward trend. Some would argue that an unofficial bull trend has been going since the bottom when we hit 16,000, we'll say 16,500, whatever it was. And we've been on an uptrend ever since. Higher highs, higher lows. We've never once broken structure. We came close when we had, I guess if you want to call it a dump. When was that? That was in August. August. But we basically retested the previous low and then bounced from there to where we are currently. So we've been maintaining structure. And I mean, if you look at it without knowing that we were in a bear market, you would think that, that's one heck of a bull market. So we are definitely in a bull trend, upward trend, and we'll see if it continues.
Yeah, that's one thing I've been lucky with is catching tops and bottoms of markets. I ended up selling the top of the last bull market at, I think on Bybit it was 68.6 or something. And then I did a little bit of DCAing below 30 on the downside, but the majority I got in at 15.6. and using the most simple metric possible, it was we're running through the bull market, and then there was a lot of speculation and people wondering, where could this price go? Where could this go? Where could that go? How long do we have? And then suddenly overnight it changed to everybody on a common consensus that it was going to hit 100K, and no one deviated by it, only tried to find reasons to justify it. And it's like, all right, now there's nothing logical happening here. This is just straight market excitement. And I sold. And literally the day after, it starts going down and going down and going down and going down. And at the bottom of the market, it was the same thing. You go from, how much lower can we go? How long can this last? How long can we dump for? This is what other markets did. And then suddenly it was common consensus across the whole board that 9K. It's going to 9K. They got no reason for it other than everyone's saying it's going to 9K and it's going to 9K. And I went, there's my bottom signal. I'm going to buy it.
You definitely got lucky with the bull market turning bear, because I was one of the ones that thought it was going to run a little higher, because we were new into the crypto space and we always heard about this parabolic run before the bear market settles in, and we didn't really get that parabolic run. We had a bit of a peak, it came down, went a little bit higher, but we didn't get that euphoria that other bull markets have seen. So I was kind of caught on that one. I'm still holding some bags that I had way back then. I mean, I obviously did make some smart decisions and took profits on some of my holdings, but for the most part, no, I expected that blow off top. And then, but the bear, yeah, I was right there with you. Once we got down to those levels, I thought, okay, this is definitely got to be it. As a matter of fact, I had even mentioned it to a few people at work. I didn't, give them advice or anything, but I did say, I believe this will be the area that we kind of bottom out at. And a couple of them bought, and it was the smartest thing they ever did because now they've basically bought the bottom and they're sitting pretty right now.
Yeah. Ryan, bull flag failed miserably last night. Oh, can't climb up forever. Wait for the retest. Always wait for the retest.
Yeah, and I had actually mentioned that. Yeah, it was a picture perfect bull flag on.
Oh yeah, it was.
And it kept trying to break out the top, but then it did fall through. And I had mentioned it to a few people that you got to watch out for that retest. If it doesn't retest on the way up, then you can only do it so many times where you try to break out, and eventually you're going to break down if it doesn't happen.
Yeah, that's exactly what FOMO is, right? You don't want to miss out on a huge pump, especially when everything seems so good. But ultimately, people are going to take profits. And when they take their profits, it's going to cause a negative trend in the market. People don't trade and hold forever. And a big part of what fluctuates Bitcoin's price is the derivatives market. So you got people in leveraged positions of Bitcoin that doesn't exist, of 30, 50x on some exchanges. And it's absolutely crazy how much one whale can move a market when you're 50 times your investment. So yeah, you gotta be, for me, being the conservative trader, it's always wait for the retest. If you miss something, there'll always be another chance.
Yeah, always another opportunity. You don't want to chase trades. Number one rule.
No. And then the same goes with on the downward slope. You don't want to catch that falling knife because you just never know where it's going to stop, right? Like, especially in a downward market. when you start hitting long liquidations that goes down, and it goes down fast, and it can be some fast, easy money, but most people are trying to catch that falling knife, and they're just getting wrecked all the way down.
Mm-hmm.
Trying to get that, catch that bottom.
Another thing a lot of new traders need to stop doing is when the markets are pumping and they're going up, you see a lot of new people in the space, or new people to investing in general. That's when they tend to buy. And then when there's a dip in the market or a retest or something, and the day is red, that's when they sell. I'll never understand why people do that. And like when I first got in the market, even I knew that you don't buy on green days and sell on red days. It's common sense. But I think a part of that has maybe to do with, if they're investing money that they can't really afford to be investing, and so they're a little bit anxious about it. So when they start seeing that number going down, they'd rather take a 10% loss or 15% loss, thinking that it's going to go all the way down, and if they hold, they'll lose 50 or 60%. See, the whole point about this market, the crypto market especially, you gotta have a long game mindset, a long term mindset. You gotta use money that you can afford to just forget that you even have, put it into something that you really believe in, or something that you think is going to do well based off of what you read and research you do, and then just leave it. It's eventually going to go up. There's no ifs, ands, or buts about it.
Yeah,
I'm talking major ones like Bitcoin and Ethereum, and the big players.
Yeah, and a lot of people take news events at face value,
Mm-hmm.
and I don't know if that's a feeling of self-importance. Like I said before, why does this person want me to know that? They don't know yet. They're forking out a decent amount of cash to get that information out there. Now, who is it benefiting? Right? So generally when you get a lot of bullish sentiment in the news, there's a lot of people sitting with their finger on the sell button. So when you do have a trend, you're always safer to wait. You'll have
explain that to people that may not understand what you just said. Why would a bullish news story, which causes the price of Bitcoin to go up, be a bad thing?
Because where there's buyers, there's sellers. And like I just said a few minutes ago, short money is fast, easy money. So you get people that will set up a leverage short position, say, okay, we're at 30K. I'm going to set up a leverage short position at 34K and put out a whole bunch of news FUD, get everybody all excited. You got buy. And the market just shoots right up. And then it hits these short orders and it's outweighed from the retail buyers. And then down you go. And then it's not even just the earnings of moving the market down. Then you start hitting liquidations for people that are over leveraged. And then you're multiplying, instead of what would be a 3% dump, now it's dump 15. It's a risky space. And you need to have that low leverage, take it slow, don't rush, don't FOMO mentality to survive, or you will lose. You're going to lose on trades. You're going to lose on investments. And it doesn't matter whether it's crypto space, traditional space. Like there are good days and there are bad days. And you just got to make sure that you keep your investments level in least risky space as possible. So you want to gain, but like for me, if I'm trading, I always want to have enough margin in my account that I can go down to 1x and get rid of all my leverage. And then when I do have leverage, it's very rare I'll go above 3, sometimes 4x. But I'm only using a quarter of the margin in my account. So if the market does get turned on me, I eliminate my leverage position, and then my liquidation point goes down so low that, yeah, you're looking at bear market levels to even hurt, and then you just wait it out. And then when the market turns again, just up your leverage and keep going.
Yeah.
There's a reason that Forex traders will only trade for a couple hours in the morning and then don't touch it for the rest of the day, because
they hit a target and that's it. Yeah. Yeah. So moral of the story for all the listeners, especially if you're new to the space, there are always people waiting to take your money. So the term exit liquidity is used a lot. I guess we can't really call out exit liquidity with Bitcoin, but if you hear bullish news in the market or something about Bitcoin or whatever, and you see the price going up, a lot of times, like Glenn mentioned, a lot of times that is just to bring bullishness into the market, bring money into the market, so that there are whales and smart individuals, the elite, just waiting to take all that liquidity out and dump it on you. So, and when it comes to leverage trading, make sure you do your research, practice first. I can't stress that enough. Make sure you understand what you're doing and how to do it. Don't just jump in with some money and say, I'm going to ride this out and put on high crazy leverage, because as you mentioned, there's someone on the other side of that computer, and they're just going to take all that money from you, because as soon as you go one way, the market will often go the other, especially if you don't know what you're doing. So research is the biggest thing. Understand what it is you're doing. Do it responsibly. And when it comes to buying Bitcoin or other crypto assets, the blue chips, just buy and hodl, buy and hold.
Yeah. When you're on an exchange doing a trade, you gotta remember that your position is there on a list for anyone to see, and these experienced whales, they'll sit there and they'll just scroll down that list, and guess what, man? This is the cutoff point. Here we go. Yeah. We know how much it's going to take to liquidate X amount of people, and we'll take that liquidation money as well.
Now, don't let this make anybody afraid to get into the market. Absolutely not. There is money to be made as long as you understand what it is you're getting into. Education is key, and that's one of the things we're going to do on this channel. We're going to bring as much education to anyone getting into this space. Anything we've learned along the way, both Boiler Dip and I have been in the space for a couple of years now. So few years. So we know, we've been there, we've done it. I myself, I don't leverage trade anymore. Reason for that is because, like everyone else who's new into leverage trading, I got really cocky. I thought I knew what I was doing. Got into a trade that was pretty good at the time, but greed set in. I kept the trade open, the market turned, and I lost my entire position. So lesson learned. I mean, you got to have the hard fails to understand exactly what it is you did wrong and to improve on next time. And a personal choice of mine, I no longer do leverage trading, but I still do chart. I still do watch the market and understand exactly what's going on, so that I'm in touch with everything else. That's my little story.
Yeah, the beauty about the crypto market, that there's, no matter what's happening, there's always somewhere you can earn and compound. And we're in an exciting time for now. It's not just Bitcoin declared an asset. We got XRP in that list now too. So yeah, the ability to teach from our losses and show how to do proper research, not just in the coin space or trading space. When the hype starts coming back in the NFT space with whatever new technologies happening there, or the DeFi space, like, we have two different perspectives on how to do the due diligence, and you could probably pick up a lot and not make the same mistakes that we've made in the past. So
that's the goal. We'll try to we'll try to help you avoid mistakes that we made, and learn without actually having to go through the hardships that we did.
Yeah. Anytime something bad happens, the ownership is always on the investor. There's always a way to tell at some point, no matter what. And it's whether you picked up on it or not. So being able to break apart news and follow the money and see how things are operating and whether it's sustainable or where a project's going from just listing JPEGs permanently on a blockchain to an end goal with, say, tokenized real estate or et cetera, right? There's things to look into when you get into projects and their longevity and where they're going. So, and a lot of the time, the biggest pumpers are the worst investments.
So
the
true.
meme coins and everything else. They have no functionality behind them.
Yeah. Floki. Oh, Floki. Okay. Well, before we close out the stream, the title of this week's video is "Did this week confirm the next crypto bull run?" So I'll go first. I guess we don't really have to answer the question, but I'll share my thoughts on that. I've been saying for a little while now that I believe we've been in a bull trend ever since the low back in November of 2022. 16,500, I think, is what we got down to. We'll say 16 even. And according to the charts don't lie. It's been in an uptrend ever since. And considering we've been having some pretty tough economic times with interest rates going up and commodities going up, cost of gas, the cost of food, everything's just going crazy. Threat of recession, but yet Bitcoin still perseveres. That tells me that the sentiment is strong, that people believe in the asset and believe in the space. And so I think we're not officially in a bull market yet. That won't happen until, there's a few things that have to happen, a few EMAs and stuff that need to be crossed and a few things that need to happen. But we are definitely in a bull trend. And I think that's going to continue well into 2024 and into 2025.
My perspective is, if you look at the Bitcoin chart year to date, we have been in a bull market since January, and people are just starting to get excited now. So, yeah, it's exciting times to come. I personally think there's going to be some sharp gains and sharp losses going in towards the end of the year, beginning of next year. But ultimately, I can be bullish, and I see a potential for all-time highs by the end of this year.
By the end of this year? Wow.
By the end of this year. And then, going into spring, that's when the excitement's really going to kick in.
You heard it, bears. You heard it here.
Yeah, I've been a bear hunter for a long time.
Well, I think that much we can agree on. For all those bears that believe we're going to get that one more shakeout, I'm sorry, guys. I think that time has passed. Before, maybe 2 weeks ago, there was still that slight chance when Bitcoin went down to the high 25, low 26. It was possible that there was going to be a run down to 20,000, but I don't think that's going to happen anymore. Bitcoin has made its move. It has, expressed its stance that it wants to go up, and I don't think we're going back down.
Yeah, I think world tensions, there's a potential for a black swan. I think ultimately it'll be an instant rebound and continuation. And we did see that beginning of the last bull market as well. We had a nice 50% pump up, and then the COVID crash, which would have been the black swan event. And then very shortly after, it was business as usual, and then running into the halving and money printer going.
That's going to happen.
Like everything's lining up the same way this time.
Yeah.
So,
Yeah,
and then,
I think so too. I don't think we're
yeah.
going to have a different cycle this time. It seems to be so far following the same path.
And then anybody watching, if you want to, normally at the end of the stream, we'll have our roundtable segment that'll finish it off as a group chat. So if there is anybody that's interested next week, 7:00 p.m. on Thursday, that would like to get in on the roundtable and chat, email the links on the page here, or some of you know how to get a hold of us in Discord and Telegram. So just let us know beforehand. We can have you in the waiting room and get another perspective. And the more perspectives we get in a space, the more chaotic and fun this gets, and the more people can learn from others. So
yeah, exactly. And also going forward, if anybody has any thing that they would like us to discuss, any topics, anything of interest, let us know. Drop a comment in the comment section. We read all the comments, and we can talk about that in a future episode.
Yeah, I could talk about SHIB all day. Wink, wink.
Oh, Floki.
Telling you, it's going to be something special.
Yeah, well, as long as Elon has something to say about it. Sheep and Doge.
Sheep and Doge. All right, so you ready to wrap it up? And until next week, and we'll see what happens.
Sounds good.
Bye, everybody.
Thanks for joining, everyone. Have a good week.